Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. U.S. stocks paring their gains today after a largely positive jobs report. Payrolls rising by 5 million, but remember, most of these are not new jobs. They are just replacing old jobs that were lost. The unemployment rate falling for the second straight month, but there are rising concerns that resurging cases of COVID-19 could jeopardize the economic recovery. Our Abigail Doolittle has been following all of this. Abigail, the market's up, but off the highs. Of course, jobs driving the early gains, but still the concerns about new cases seem to win out.
There's a real tension here, Emily, between the good news and the bad news. So the good news, of course, that jobs report that you were mentioning, and the sense that things will improve more quickly for the economy than some had been hoping for. Not a lot of talk about a V-shaped recovery on the day, but nonetheless, a very good report there, lending some optimism. On the other hand, the virus data here in the U.S. and these hotspots really worsening. So at the end of the day, well off the highs. At the highs, the Nasdaq had been up more than 1.5%. On the close, up just 0.5%. Where we did have some outperformance, though, the FANG index and the SOX, those chip stocks. But remember, this year, that's the new defense, because those are the stocks and the companies that are really used for the stay-at-home trend. So strength there, almost indicating that some folks think that there's going to be some more stay-at-home action ahead. And confirming this to some degree, there was a bit of a rally for bonds. Not a big one, but the 5-year note up just a little bit with that yield going down. Of course, price trades inverse to yield. And one stock that was notably down, because most big tech stocks were higher, Facebook. And over the last 9 days, around some of these big companies boycotting their platform for advertising, down more than 2%, also down on the day. And of course, this afternoon, there was the headline that CEO Mark Zuckerberg is going to be meeting with some of the folks behind the boycott, perhaps trying to have a conversation there that will be constructive. But right now, Facebook over the last 9 days down, and down relatively to a large degree on a relative basis, Emily, because the major averages this week up about 4%.
Mark Zuckerberg planning to meet with those civil rights leaders on Tuesday, and a source telling me that folks inside Facebook aren't planning for this boycott to end necessarily anytime soon. It's not as if it's going to be just a month. They could feel the effects of this for longer. Meantime, we are getting some new numbers out of Texas. Cases jumping 4.7% in Texas, exceeding their 1-week average. So you're seeing cases continuing to climb in certain states across the country. Meantime, Abigail, I know you've also been looking at Tesla sharply higher after delivery numbers for the second quarter hit a pretty big number there. What did you see?
Yeah, this is really interesting. It doesn't quite make sense to me relative to the pandemic. And you're talking about these worsening numbers in Texas and Florida, these hotspots really taking off. So this is relative to the second quarter that, of course, ended just a couple days ago. They typically do their pre-announce on deliveries, and they delivered almost 91,000 vehicles in the last quarter. It's sort of astonishing to me, given the fact that much of the country was shut down, and certainly much of it was not driving at all. But apparently there was pent-up demand of some sort for these vehicles. It was 2.5% growth. Production was down 20%. But what's really amazing, Emily, this stock on the year, take a look at that chart. It's out of control, up 189%. Parabolic uptrend after parabolic uptrend, another all-time high. So the Elon Musk factor really seems to be behind some of the stock action. Of course, yesterday we were talking about the fact that this company's market cap is now bigger than Toyota's, but Toyota's sales on an annual basis simply dwarfs the sales of Tesla. So a lot of folks really giving this company a much bigger valuation, whether it's Elon Musk or the technology valuation. Right now, Tesla longs doing really quite well in this unusual year of 2020, Emily.
All right, Abigail, thanks so much for breaking it all down. Meantime, staying on the topic of jobs, our next guest is Charles Kuykendall, Director of Talent Acquisition at PlayVS, which is an esports company that offers a legitimate official platform for high school and college esports and gaming. Prior to recruiting at PlayVS, he worked in various senior recruiting roles at Facebook, Airbnb, JP Morgan. Charles, thank you so much for joining us. So digging into these jobs numbers a bit further, what is the picture you're seeing across the country as we see, some jobs coming back, but not necessarily new jobs, perhaps just jobs that had already been lost?
Thank you so much for that overview, Emily. From my perspective, I foresee a continued decrease, which is a positive of the unemployment rate. Being down 2.2%, I think we have to view optimistically, I'm an internal optimist, so I do view that as a positive. Granted, we're still 11.1% above the pre-pandemic numbers for all-time low. So we have a lot of work to do. A lot of companies are continuing to hire. People that I know in my personal network who were unemployed in March have now started to get roles, and I foresee the next quarter that continuing to decrease.
That said, the economy is in a recession. Cases are resurging across the country. And if there's one thing ahead, it is more uncertainty. How do you think that impacts the jobs market in the short term, like the next 6 months?
I would say in the next 6 months, it is on the companies to be flexible in the way that we go about recruitment and hiring, thinking about location strategies and the need to be in specific places around the US. I think that level of flexibility and honestly changing what to some degree has been very core to how businesses have operated to this point, shifting that strategy up front, and then thinking about whether we need to increase numbers of contractors and or full-time, and just being very strategic about our hiring plan over the next 6 months. And again, we could continue to attack that number.
I wonder what this means for contractors right now. You know, they seem to be feeling the uncertainty the most.
Well, I wouldn't say that, Emily. I would say contractors and or full-time employees. If you look at, what happened in March, there was a number of talented individuals that lost their jobs who were full-time, who thought they had 4 to 5 years of security in a role. So I think that, across the board, it's a very uncertain time. And whether that is contractor or full-time employees, everybody's doing the best that they can to attract and retain the talent that we do have.
Meantime, I know you've really focused on diversity in a number of the roles that you've had, and I'm curious how you think diversity will be impacted at this time. On the one hand, you've got companies just trying to stay afloat. Are they thinking about the representation in their workforce? But on the other hand, you've got momentum behind the Black Lives Matter movement and new commitments from CEOs to do better.
Absolutely. And I don't think that the pandemic is any excuse at this point in time. There has to be a diverse focus in every organization. I think the biggest problem that people often share, Emily, across my tech career is that, people at these senior level positions do not exist. But that is a falsity. There are a lot of diverse organizations that are out there that can help you build your top of funnel and partner with those. I know here at Play Versus, we partner with a company called Next Play Events. Delane, our CEO, spoke there, and that brought in a lot of inbound resumes. But in addition to that, once you do find them, you need to put focus behind being strategic about hiring them. And most importantly, Emily, you have to retain them and then promote them. That's the full cycle way. Candidate identification, retention, and then promotion.
Meantime, I know this has been hard on everyone, but it's been really hard on working parents. And as you have these resurgences across the country, it seems like there's a push for schools to reopen, but we don't know if they really will. That puts an additional burden on working parents, especially going into the fall. How are you handling that with your working parent employees internally?
Yes, Emily. I mean, I'll be a walking example. I had to ask my mom to take my son outside so he doesn't run in here right now. And if he did, he would definitely take over the interview. But more importantly, we as parents and as executives, top down, have to be comfortable with having those type of interruptions and trusting that we are, while we're in shelter in place, getting our jobs done, and being effective, having these virtual meetings and things of that nature. So I think just long term, our shift in the way that we operated prior to COVID and the way that we're going to go back post is going to change tremendously. There still needs to be a work-life balance, even though we're at home all day, and the focus still on family. Like, I get to spend time with my son after work hours, and if he comes in and interrupts a meeting, for myself at a director level, it gives people comfort who are more in the mid-level that if that does happen, it's not reflected poorly on them. And I think that is a company culture that we have here at Play Versus, and every other company should have as well.
Well, let's also hope that a few little ones don't run in and interrupt us on this side as well. Playverse runs a high school and college esports platform, and I'm curious if you can tell us a little bit about demand during the pandemic. I know folks have flocked to esports with the freeze on professional and live sports, and also curious, given so many children quarantined at home, how that's impacted things.
Yeah, so we are, again, people are at home, people are able to play. We're gearing up for fall 2020 season. And we also are allowing for people to be able to play from home. So please go to playversus.com, see some of the very cool things that we're doing right now. We have a number of game offerings. And most importantly, we're building community through this platform. It's not just win or loss. It's all about building a community. And that's the focus that we have. And we hope that everybody who's watching, go to playversus.com and take a look for yourself. I think you might pick up a controller or two.
All right. Thank you so much, Charles Kuykendall. Playverse, thank you so much for joining us. Really interesting to have your perspective here today.
I really appreciate it, Emily. You guys have a good one.
Thank you. Okay, coming up, deal-making talks between Uber and Postmates have gotten tense, so a source tells me. Should Postmates consider selling to Uber or an IPO? We will discuss next in the midst of ongoing food delivery consolidation. This is Bloomberg. Postmates is now planning to file for an IPO. This according to a report from Fox Business. Amidst deal talks with Uber, a source tells me that deal-making talks have gotten tense and now things are up in the air. This is Uber's second chance at trying to revive or add to, we should say, its Uber Eats unit and improve profitability in a consolidating industry. For more, I want to bring in Tae Kim, Bloomberg opinion columnist who covers technology for us. So what's your take, Tae, on the way this is going? Should Uber be pursuing Postmates at this point at a price of, upwards of $2.5 billion?
I think so. I think they don't really have a choice. They really need to get a deal done. They tried to get Grubhub last month, and they lost a bidding war with Just Eat Takeaway. And since it's a European acquirer, it doesn't fix the problem of there's too many players in the U.S. food delivery space. So they really need to get a deal done. The food delivery industry as a whole, the last few years, has pursued this growth at all cost strategies with lavish promotions and discounts. And the problem is that results in massive losses for everyone in aggregate. And Uber Eats, which is losing like $300 million a quarter for the last 3 quarters, they can't continue this massive cash burn. And there needs to be consolidation. So Uber really needs to get this deal done.
But Postmates is also burning cash, and critics say that Postmates would only expand Uber's footprint in one geography. Is it worth it?
I do still think so. I mean, they'll be able to consolidate the operating expenses in marketing, sales, but also just promotion-wise, they really need to get that down from 4 players to 3. And I think eventually this market will turn out like the ride-hailing market, where you had all these different startups, and now it's down to 2 players where they can be profitable on an EBITDA basis. So this market really needs to consolidate. I do think it's worth it. But we'll see what happens.
As you mentioned, Just Eat Takeaway buying Grub. You've got DoorDash, the juggernaut here in the United States. What is Postmates' best option, though, if food delivery is taking off? Because we're in the middle of a pandemic, maybe their business suddenly looks better. And do they pursue an IPO instead?
It totally depends on what they think they can put out in the market with the bankers, and also what Uber's going to pay for. But even for Postmates, if they do an IPO, it doesn't fix the problem of there's still too many players in the market. And even though the whole delivery market is taking off right now as a big beneficiary of the pandemic, Morgan Stanley says that it's going to be up 4 percentage points in terms of online penetration of the U.S. restaurant market. It's still, the cost structure is still out of whack, and everyone's still doing all these promotions and losing money. So no matter what, some consolidation has to happen at a certain point, and everyone can't be losing hundreds of millions of dollars every quarter. It's not sustainable.
All right, take him. Bloomberg Opinion. Appreciate your analysis there. Thank you so much for stopping by. We'll continue to follow the deal talks. All right, coming up, drug makers rushing to develop a COVID-19 vaccine as cases top 10 million globally. Where do we stand? More ahead with Dr. Seth Lederman, Chair and CEO of Tonix Pharmaceuticals, which is working on its own vaccine candidate. Next, this is Bloomberg. What's happening? Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Turning now to the race to fight COVID-19. Lauren Sauer of Johns Hopkins University joined us earlier to talk about the surge in cases of COVID-19 across the country. Take a listen.
I think the most important thing we can do today is continue to encourage the public to physically distance and to wear masks. A lot of the research that's coming out is showing that that is working, and so we have to be vigilant. I think we all want to move towards reopening, but looking at the growing case counts, looking at the cases that are burning across the United States, I think it's absolutely critical to maintain those basic public health interventions.
Lauren, it is July 1st. Get out the calendar. Back to school shopping begins in 42 days. Are we going to go back to school? What does the pandemic do to the classroom of elementary schools, middle schools, and those disease-ridden seniors and juniors in high school?
Everybody wants kids to go back to school, probably parents the most. But I think, we have to take a cautious approach to opening. We have a lot more research to do on how kids are affected and how kids transmit the virus. And so there's a few things that are really important in the planning, understanding how you can keep kids safe in the classroom, how you can get them back safely, and also how you can keep the families of the kids and the teachers families safe. I mean, these are adults who some of them may be, and so you have to figure out ways that you can keep them as safe as possible. And that may mean increased testing of kids who are going back to school, better access to testing more broadly for their families, for teachers, for administrators in the school, everyone involved in the process.
What do you think will be the process when somebody in chemistry class in the 10th grade gets the virus or their father gets the virus? How are we going to do that?
Yeah, it's going to be really hard. I mean, I think access to testing remains so critical to all of these reopening strategies. And, schools aren't immune to that just because it seems like kids get less sick or transmit less. There's still a risk. And so if you have someone back at a school who starts to be symptomatic or who has a symptomatic family member, then you backtrack, right? So you do the things that we know work. You identify that kid, isolate them from school or pull them out of school, do contact tracing and symptom monitoring on the people who came into contact with that person. It's hard work, and it's the only option we have right now, those basic public health interventions.
Lauren Sauer, how do we encourage people or even maybe force people to wear masks?
Wearing a mask is politically quite divisive right now, and it's really challenging, and it's something we've been doing a lot of work on. It is a basic intervention. It is safe. We're seeing data that it works. In the early times of the outbreak, there was a lot of mixed messaging because we didn't have enough masks for healthcare workers. We didn't know if people could use them safely. We hadn't educated the public on how to wear them. And a lot of people, myself included, were skeptical on their utility. And I think we've seen a lot of data come out to know that they are effective, not just in keeping ourselves safe, but in keeping other people safe. So the message is really that my mask is for you and your mask is for me. And if we all wear masks, we can get through this a lot more safely with a lot fewer infections and fewer deaths.
Turning now to the race for a vaccine, we've got Dr. Seth Lederman, CEO and chair of Tonix Pharmaceuticals, which is working to manufacture a vaccine for clinical trial supply. Seth, thank you so much for joining us. We've only got a couple minutes here. Talk to us about the latest in your quest for a vaccine. Where do things stand against the broader backdrop?
Thank you for having me on, Emily. We're all in a rush. We are pushing forward with our vaccine, which is on a relatively unique platform, and we are headed towards animal studies later this year, and hopefully to have a vaccine to test in humans next year.
When do you think we'll have a vaccine that mainstream Americans can access?
Well, that's an excellent question. I think there will likely be one or maybe more vaccines in 2021, but the first and fastest isn't necessarily the best. So the availability of a vaccine will take a while to figure out what people really want to take. And some of the early vaccines may protect people for a short time. There may be temporary immunity, and there may be some other benefits. But long term, we want a vaccine that provides durable immunity and ultimately prevents what's called forward transmission, which is how contagious someone is if they do get infected.
Meantime, you've got so many different companies racing to a potential finish line here. What is the value of a pharmaceutical horse race?
There's a lot of value because we don't really know which vaccine will be best. There's a lot of uncharted territory with this virus. So this unprecedented effort and the diversity of approaches is really welcome because everyone is learning very quickly about the virus, and by having a diversity of vaccines, I think we have the best opportunity to get effective viruses. One of the other aspects is that there may be a situation where certain vaccines are better for some people and others are better for others. So I think that that's another important aspect of this diversity in the vaccines that are being developed.
Interesting. All right. Dr. Seth Lederman, CEO and chair of Tonix Pharmaceuticals, thank you so much for stopping by. I do hope you're right and we get these vaccines that quickly. All right, coming up, Silicon Valley success stories include a myriad of immigrant venture capitalists, CEOs, and entrepreneurs. How will the recent White House ban on skilled worker visas in the U.S. impact the tech economy? We'll discuss next. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. The latest research has found that almost 400,000 temporary visa holders and green card applicants have been affected by President Trump's latest executive order, barring them from entering the country until next year. A majority of these are tech employees in Silicon Valley who don't know when they can even return to see their families in the United States. Joining us now for more on how this affects the U.S. tech industry, Arif John Mohammed, a partner at Lightspeed Venture Partners. Arif, thank you so much for joining us. You are an immigrant yourself, and I know you have some strong feelings about this. How do you think that this will impact the tech economy?
Yeah, first off, Emily, thank you for having me here. It's such a pleasure. I'll start by saying that this is actually deeply personal to me. I am actually an immigrant myself. I came to the United States 20 years ago from Canada. My family is also immigrants. They moved to Canada from East Africa, and for that, my ancestors moved to East Africa from India. So immigration has been a part of our lifeblood and fabric. But 20 years here in the United States, I've been on almost every single visa that you can imagine, been an engineer, been a product manager, and now an investor. And on a personal note, my wife and I actually became U.S. citizens a couple of weeks ago. So it's very troubling to see what happened to the 400,000 people who were immediately affected, and then perhaps the millions of people who will be affected later on. I should note that Lightspeed Venture Partners, which is a global firm with offices around the world, in India, in Israel, in China, and also here in Silicon Valley, a lot of us are also immigrants, either children of immigrants or immigrants ourselves, hailing from places around the world like India and China, United Kingdom, Australia, et cetera. So for us, this strikes at the heart of what we do. And Lightspeed has, over the years, over the last 2 decades, we've got a strong track record of having backed many immigrants who came to the U.S. Either as part of their studies or either searching for a new job, worked at companies like Oracle, like Microsoft, like Cisco over the years, and then started their own companies. And those companies across Lightspeed's portfolio have created 35,000 jobs or more here in the United States, and many more multiples of that around the world. And so I believe that this policy is short-sighted. It unfortunately will stifle innovation here in the United States. It will hurt us on the global stage long term. And if you look at some of the track records of people who we have backed over the years, people like Dheeraj Pandey, who came here from India as an immigrant, worked at Oracle, started Nutanix, a $5 billion enterprise infrastructure company. Max Levchin, who came to the United States as a child, started Affirm, and before that PayPal. Ajit Singh, who started 2 unicorns, including Nutanix and ThoughtSpot, which between them employ over 7,000 people around the world, 3,000 people here in the United States. Or even folks like Ariel Cohen and Ilan Twig, who came from Israel, started TripActions, a corporate travel unicorn, and employ hundreds of people here in the United States. It's just devastating to see what will happen over the long term. There's a lot of studies that show that people who come here have a higher propensity to start companies, and those companies eventually end up employing a lot of Americans.
The list is long.
The list is long, indeed.
Business goes on. Business goes on, and I know that you've been focused on advising companies about how to deal with so much uncertainty ahead. You know, we were just talking about Postmates earlier in the show. Do they go public at this time, or do they sell to Uber? You've got companies facing some pretty critical, long-term decisions here. How do you think companies should be approaching this?
There's a lot that's happening in the world right now. One is COVID, second is immigration, third is a potential economic downturn. I think companies should be thinking long-term, not short-term, but also really thinking about how they could manage their short-term cash needs and balance that against coming out of a potential downturn much stronger. And for us, from our portfolio perspective, we've been spending a lot of time with our portfolio founders, really thinking about how to maximize cash runway, how to make sure that they have enough cash for the next at least 2 years, how they're thinking logically about hiring, how they're thinking logically about growth over the next few quarters and then next year, and then how they invest in technology so that when we do come out of some of this uncertainty, they're stronger, they're much more efficient, and much better capitalized to take advantage of the eventual recovery when it does happen.
Meantime, talk to us about where you are most optimistic about seeing growth. Obviously, Lightspeed has both a large enterprise and consumer portfolio. I know you're an investor in Cameo, for example, which has taken off in the pandemic. We just had the CEO on last week, but you worry that some of these companies that are benefiting right now, when people go back to work eventually, when life returns to some sort of new normal, then trends change again. So what do you think, what are you putting your bets on for the long term?
Yeah, right now we're definitely seeing some areas that are seeing very, very strong traction as a result of COVID, but we also believe that in both enterprise and consumer, it takes on average about 21 days for users' behavior to change. And so once behavior has changed, it's hard to unchange that behavior. And so you're right, Cameo is a great benefactor of what's happening with people sitting at home and looking to communicate socially, to celebrate milestones, to celebrate anniversaries, weddings, birthdays, by sending a cameo from a celebrity. That's definitely one company that has seen a strong uptick. We're also seeing in other companies like Daily Harvest, a strong behavior change around ordering organic smoothies and organic food, and really just changing behavior. On the enterprise side, where I spend most of my time, actually all of my time, we're seeing things that will be structurally different over the next 3 years as a result of COVID. For one, if you think about what Satya Nadella, CEO of Microsoft, said a few weeks ago, 3 years of digital transformation has actually happened in 3 months. And what this means in layman's terms is that the shift to the cloud, the shift to software as a service has accelerated. And you can see some of that in the public markets, really pushing up the prices of some SaaS companies. But for us, we look at where that actually creates new opportunities. And the first derivative of any application change is security. And one area where we're seeing a huge amount of tailwinds as a result of COVID is certainly security. One of our companies, Netskope, built a security cloud, which is a globally secure network that is now trusted by 25% of the Fortune 500. They're seeing increased demand in the past few months. We're also looking into areas like online education. My kids are on an OutSchool right now, which is video delivered schooling. I mean, we're seeing a lot of areas that we can actually invest in. And lastly, of course, remote work, where there's a lot of, we're on Zoom right here, right? And I'll note that without immigration, Eric Yuan would not have come to the United States, joined WebEx, and started Zoom. I mean, that's a great example of an immigrant who's created a $75 billion company. But if you look at how we're changing the way that we collaborate, whether it's over video or whether it's over chat, like Slack and Microsoft Teams, there's also new opportunities that pop up around those new platforms. So we've got a company called MoveWorks, which is built around chat and AI to resolve employees' help desk and service desk issues. Can you reset my VPN password? Can you get me access to Zoom? Hey, I'm having problems logging into Salesforce.com. Typically, that would be done over the phone, or that would be potentially done in person at a Genius Bar. But MoveWorks, which sits on top of Slack and Microsoft Teams, is actually resolving those issues over chat for employees in 30 seconds instead of 2 days.
Right, absolutely. So much has changed. Arif, we're going to have to leave it there. And by the way, you mentioned 2 more companies, Slack and Microsoft, that are run by immigrants as well. Arif John Mohammed, partner at Lightspeed Venture Partners, thank you so much for joining us and giving your views on the view ahead. All right, coming up, an economic crisis can't stop companies, as we were just discussing, even unprofitable companies, from going public. Our conversation with the CEO of Lemonade, which went public today, shares soaring more than 100%. The CEO is with us next. In the midst of a pandemic and an economic crisis, the online home insurer Lemonade raised $319 million in an IPO today. Shares soaring, closing the day almost 140% above the initial price. I spoke with Lemonade co-founder and CEO Daniel Shriver from the floor of the New York Stock Exchange. Take a listen.
The performance of Lemonade over the course of the last few months has been little impacted by the pandemic, much to our surprise. So the business has proven itself to be more resilient than you might have imagined or we might have feared. And a lot of the key performance indicators that we've been tracking for a while that were on an upwards trajectory continued despite the pandemic. So the health of the business has proven strong and resilient, and that's allowed us to go public.
Shares trading up now almost 140% above the initial price. That's great in terms of positive momentum, but are you concerned at all that maybe you underpriced or were too conservative given the money left on the table?
Honestly, we are a young company. We've been in market less than 4 years, and we see ourselves as having a journey of 20 years of growth ahead of us, which is why we went public now. We thought the public markets are really the place on which to build an enduring, iconic company. We're not going to look at what our shares do in a number of hours or minutes. We're really going to look at building value for years and hopefully decades to come, and we'll measure against ourselves against that rather than against a few hours of share performance, however exhilarating those have been.
So speaking of the long term, one of Lemonade's selling points is just how quickly you deliver quotes, how quickly you pay claims. That said, you're still not profitable. What is the timeline for profitability?
So we do feel that this is the time to make bold investments, that there is a window of opportunity now that may be the cheapest time in the next 100 years to build the reincarnation, the 21st century incarnation, if you like, of what a modern digital insurance company can be. And given the size of the prize, making bold investments now makes sense. That said, we are already seeing a path to profitability. Our losses per every dollar sold have been shrinking pretty rapidly. So we lost about $2.4 in 2018 for every dollar, and that dropped to 1.4 in 2019 and to 70 cents in the first quarter of this year. All the while, our marketing efficiencies have doubled over the last 12 months. So I do think there are indicators to suggest that the investments that we're making will, over the long term, produce real returns.
I wonder, though, we've seen so many tech companies invest a lot of money for the long term. And given the environment we're facing right now, we've seen a lot of companies have to pull back. Airbnb, Uber, Lyft, massive layoffs and more uncertainty ahead. So I wonder if conserving cash right now is something that you're also considering.
When the pandemic hit and the lockdown began, we did that. We took our foot off the pedal and waited to see what would happen. And when we compare the 30 days of April of this year, which was really the height of the pandemic and the lockdown, to the 30 days during the same period last year, we spent a third fewer dollars, even though our business was twice the size. In terms of marketing, but those marketing efficiencies were so great that we produced 130% more sales. So actually we continued to grow even as we took the pedal off the metal, and that emboldened us to go back into a more of a growth mode. In fact, we've increased our headcount by about 20% during the lockdown. So as I say, I know that the pandemic has affected many businesses in a very tough way. It has been helpful to some businesses. For Lemonade, we've really seen a continued up and to the right progression, which began before the pandemic, has continued during it, and we hope that signifies that it will be able to continue after the pandemic as well.
SoftBank owns a 20+% stake in the company. Given all the struggles they've had over the last year, what's it been like working with them and through this IPO process?
SoftBank have been just the dream investor for us. They really have. Now, I know that they've taken a lot of hits in other companies and in public perception, but if it wasn't for reading the papers, just looking at what we know of our relationship with them, they've been stalwart supporters. They supported us throughout this IPO. They supported us beforehand, and we're really proud to have them as shareholders at Lemonade.
Meantime, insurance claims are down to record levels given the pandemic. You've got folks out there who can't even make rent, let alone pay renter's insurance, and who maybe aren't moving right now. How do you see growth playing out over the short term as, economies start to reopen, but in fits and starts, and we're seeing a resurgence of the virus around the world?
Yeah, absolutely. And we try to help out in a variety of ways. So as I say, that the core business has been resilient notwithstanding that. And we've done a lot of things in terms of allowing our customers to delay payments, etc. We've really tried to make every accommodation needed for our customer base during these rough times. What we also do, Lemonade is unusual because a portion of our profits go to nonprofits. We are a public benefit corporation. We're certified B Corp. And once a year, and it's actually right now in July, we have our Give Back Day where residual premiums are given to causes of our customers' choosing. And when the pandemic hit, we wrote to all of our customers and asked them if they'd like to channel those monies towards COVID relief, and tens of thousands of them did that. So we're really glad to say, both in terms of taking care of our customers and our customers being able to take care of their communities, we're trying to do our part.
So last quick question. We've got about 30 seconds left. What's your global plan? I know you're also in Germany and in the Netherlands.
Yeah, so the fabulous thing about insurance is that it generates companies that can last 100+ years and do tens of billions, if not over $100 billion a year. Certainly a prize worth fighting for. We're in the early innings. We're 4 years old. We've got a lot of work ahead of us, but we do want to continue to expand. So globally, we are now in Europe. We launched Germany. We launched the Netherlands during the lockdown. We're expanding throughout the United States, and we hope to expand into new customers, new geographies, and new products in the months, years, and decades ahead.
Lemonade CEO Daniel Schreiber there on the day of their IPO. Coming up, we're going to be talking about Tesla shares surging today after a big delivery number for the second quarter. We will discuss next. This is Bloomberg. Shares of Tesla surging today after the company reported a sequential gain in quarterly deliveries that seemed improbable just a few weeks ago. For more, I want to bring in Craig Trudell, our Bloomberg automotive reporter. So, Craig, put this delivery number for us in context.
Yeah, sure. I like that you put the emphasis on sequential because year over year, this is a little bit down. The number that they put up today was 90,650 cars. That was more than the 83,000 that analysts were looking for in a survey that we did this week. Some were calling for in the 90,000 to 100,000 range. So, it was up there with, sort of the highest expectations that we were hearing from Wall Street analysts. But, year over year, you do have to sort of take into account this is a company that has a new plant in China that it didn't have a year ago, and it has a new product that it didn't have a year ago in the Model Y. So you have a little bit, of kind of the bear argument of, well, yes, they were able to, basically keep sales, roughly flat where they've been the last, I would say 4 or 5 quarters. But this is also, we can't forget, a quarter that everybody thought was going to just be absolutely decimated by the virus. And they managed to put up a pretty significant number for them in historical context.
Now, this is a company that, the main factory was shut down for weeks early on in the pandemic. You've got an economy in a recession, people losing their jobs who can't necessarily afford a new vehicle, and people not even commuting to work right now in many places across the country. So who's buying these cars and why?
Well, I think with Tesla, we're always kind of talking about people who do have, a solid amount of income because these cars are not cheap. Even the Model 3, there was a lot of, talk years ago about this is going to be a $35,000 car. It generally, the average transaction price on it is more like $50,000. So, they're definitely in the higher income brackets. It is a, company that has had some success really sort of building cachet with younger consumers, but they really haven't gotten to the point where they've driven prices down to where, we're talking about, more like a Honda Civic or something like that. So, we generally actually see luxury cars tend to perform really well in downturns. And, you would sort of expect that, people would have less ability to go out and purchase expensive cars. But those are the folks who tend to be, a little bit more insulated from downturns. And, that may be what we see play out in this, recession as well.
So what is the outlook over the next 6 months, given that people who do have to commute maybe don't want to take public transportation, maybe think they need that car right now?
Yeah, we definitely are hearing a lot from auto executives about the idea that, that factor will play a significant role actually in helping the industry. The idea that, people that were maybe commuting with public transit maybe won't feel so safe. The CEO of Ford recently referred to, the personally owned car as the ultimate PPE. So, this is going to be something to watch. I think the auto industry has been surprised by, sales being as buoyant as they have been. The headline numbers are really ugly, but you have to kind of take into account that fleet numbers have been really weak. We know that the rental car companies have been absolutely hammered by this crisis. People are not traveling. And so, you do have a situation where at the retail level, the car industry is actually coming back in a big way. And we're maybe seeing that as well for Tesla. They're able to get, cars out to people. They were really insistent on reopening their plant, and they haven't had a serious outbreak in California to where they've been able to continue to keep production cranking and deliveries going.
All right. Well, I know it's a story that you are following by the minute, Craig. Thank you so much for that update. We'll be watching. Craig Trudell for us there. And that does it for this edition of Bloomberg Technology. Be sure to catch our special program coming up later in the week, Bloomberg Technology Boston, The Road to Recovery. That is tomorrow, Friday, July 3rd, 7 p.m. Eastern Time right here on Bloomberg Television. And please join Bloomberg for our annual broadcast of the Boston Pops Fireworks Spectacular. We're carrying the orchestra's 4th of July tradition on from the comfort of your own homes this year, starting 8 p.m. Eastern Time on Bloomberg Television, radio, and .com. I'm Emily Chang. That's all for me. Bloomberg Daybreak Australia is next. This is Bloomberg.